Seems like it's in the headline news almost every day, impacting even some of the largest, most trusted retail giants in the country. Credit card security breaches. But did you know there's an information security standard for organizations that handle credit card information? You know, for the major debit, credit, prepaid, ATM, and point-of-sale cards? Greetings, everyone. It's Friday, February 7th, 2014, and this is Tech Talk with Technology Association of Georgia President Tino Mantella. I'm your guest host, Frank Baia. The standard created to increase controls around card holders to reduce credit card fraud and exposure. Up to the Tech Talk, Sysnet, a company established in 1989 that it provides payment card industry services specializing in what the industry calls PCI compliance validation and merchant intelligence solutions. This industry leader offers a wide range of services and an even greater variety of businesses, including acquirers, ISOs, international banks, payment service providers, and merchants. Meet Branden Williams, Executive VP Strategy for Sysnet Global Solutions. Branden has over 15 years of experience in technology and information security. After spending the first several years of his career working with educational institutions and internet service providers, Branden co-founded an IT consulting business that was later sold to a venture capitalist. Prior to joining Sysnet, he continued his entrepreneurial spirit and worked with several portfolio companies to enable them to grow their business while securing their enterprise. Are there unique approaches to payment security? How about an insider look at the recent credit card breaches at Target? If you're a pro, you will want to gain unique insights. And if you're an individual or an enterprise concerned with security, you need to know more. It's a Tech Talk all about how payments are evolving and how you and your business can keep up with both the new products and the challenges of information security in the coming months and years. Credit card security and more as we speak with Branden Williams, Executive VP, Sysnet Global Solutions. This edition of Tech Talk is brought to you by GlobalSpeak.com, new media consultants, corporate video and audio communications, video and audio production and distribution, live and virtual event production. Tag TV and Tag Radio is a service of GlobalSpeak.com, creatively delivering powerful marketing, video, and audio solutions. Branden, welcome to Tech Talk.
Hey, thanks for having me.
Interesting subject. I don't think a lot of people get much opportunity to hear a subject matter expert, certainly one with your kind of background, discussing the area of payment security. Let's talk a little bit about what makes it unique and what are the different kinds of approaches that one might consider.
Sure. I mean, payment security has been in the news a little bit lately with retailers having breaches over the holidays, and it's not really a new topic, although it's funny how many people that I interact with on a day-to-day, weekly basis that either have just a very basic knowledge of it or just haven't heard of PCI and payment security and things like that. So going back a little bit of time, the payment card companies, Visa, MasterCard, and so forth, they started seeing an increase in breaches, and they really wanted to find a way to protect this data and protect consumers and protect confidence in the payment system. So they created this thing called PCI, Payment Card Industry Data Security Standard, PCI DSS. Oftentimes people just say PCI. But the thing that's interesting about PCI in general is that, when you look at the standard, you could roughly exchange credit card data with any type of data you want to protect, and it will give you just a very solid baseline. It's by no means an end-to-end solution, and they'll even admit to you that complying with PCI does not mean you're secure. It is possible to have a breach even when you comply with PCI. But it does set a baseline set of standards. So what's happened is you have this published baseline of standards that's out there. It's been published since 2004, so at the end of this year it'll be 10 years old. And it is now essentially the new sort of table stakes, if you will, if a hacker wants to break into a network. He knows that there's a good chance that the controls that are laid out in PCI will probably be met in some form or fashion, especially if it's a large company. Mm-hmm. And so now their goal is to find ways around it and find ways to challenge the payment system in other ways.
Well, I think as you explain that, there's a lot of people who maybe have heard about payment security and have a knowledge of it, but the dynamics have certainly changed, right? I mean, since we've gone from analog to digital and with clouds and all of the different apps and the retailers now dealing with so much more of big data, if you will? Isn't there, like you're explaining, a whole different environment, not necessarily in terms of the actual retailers or companies themselves, there is, as you're explaining, but equally as much to the hackers that are just getting more advanced and better technology.
Yeah, and it's really not just the bad guys. I mean, technology in general is advancing at such a rapid pace that, so for example, if you have been around long enough to actually use a credit card for something, to buy something mail order, so this is before you'd have bought it over the internet, you would have called and given your card mail order. You may remember in the late 80s, early 90s that all of a sudden your card started showing up with this 3-digit number in the back of the signature panel that wasn't there before. And if you were to ever read the card, put it through a magstripe reader and pull the data off the back, you'd also notice that started changing over time as well to try to create authentication and other types of controls to show that the person who's using the card is the actual owner of the card, or at least has possession of the card. So with the ability of people to do online transactions now, the ability to reprint cards onto, say, recycled hotel keys or other types of things to get access to the track data, that is definitely changing quite a bit. And the payment industry is responding with new products and other things to try to combat that.
Well, talk a little bit about that. Talk a little bit about the approach to security. I mean, are there unique ways of going about it, and say one company versus another handling it differently?
Yeah, so there's a couple things that are getting a little interesting. So the payment cards, the schemes themselves have put some additional controls into the cards. You may have seen something like 3D Secure come up when you buy something online, and it's doing additional checks in the background. If you go to Europe, you'll see the chip cards, right? So it looks like a credit card, but it's got a chip in there, and you'll see them putting their PIN number in. That creates dynamic transactions, so each time the data is different, unlike our system with the magstripe where the data is the same every time. When I talk to customers, or anybody who asks me, like, how do I deal with this payment security, or how do I avoid having fines or other things because I don't comply with the standard, I usually say, look, you probably should consider outsourcing your payments. Yes, you're going to pay a couple of extra basis points, but those couple extra basis points would probably be something that you'd be spending internally anyway to protect these systems. And it's better if you're not a professional dealing with payment security, which most retailers are not. It's better just to let someone who is a professional handle that for you and just pay them as part of the transaction fee.
Well, you discussed, at least in a cursory perspective, the obvious in-the-news Target breach. Maybe go into a little bit more about how your work relates to that breach, but also maybe cover some of the challenges. Obviously, you mentioned the speed of technology ever increasing, no two ways about it. The ones that you see companies having with information security, say in the coming months, even years.
Yeah, so it's a great question. And when you look at what happened at Target, I think it really started to bring to light on a very major global scale some of the types of attacks that have been happening for a while now. There's a piece of malware that was hitting parts of South Africa and parts of Europe and even the States at the end of 2012 called Dexter. And it effectively did essentially the same thing. What it does is it sits kind of behind the scenes inside of the point-of-sale device, and it will scrape the memory for key facts like a credit card number or the track data. And it does it before the transaction can be encrypted, because typically, for the most part anyway, when the swipe occurs, that part is not encrypted, and there's software on the system that will encrypt the card so that it can't be read. But it's, while it's in there before the encryption routines happen, it's clearly visible. And so this type of attack is something that I remember when I was doing assessments in the mid-2000s, people said, oh, this is ridiculous. Nobody would ever do that. It's way too complicated. And the reality is that at the time, it's not that it was complicated. It's just that there were easier ways to get card data. You didn't have to get creative like that. But nowadays, those old avenues are starting to get closed off, and it's not as easy to get it anymore. So this type of system, which is either, it runs in a couple ways. Either it's sitting in the background and it's watching reads and writes to memory and capturing things and then shipping it off like the one at Target did. Or we've also seen some attacks where the actual point-of-sale software is loaded into a debugging environment inside of the actual point-of-sale. So because the types of operations that the point-of-sale software is doing aren't very taxing on the computer, most times people don't see a difference. They don't. It's not like, oh, gee, it seems to be running really slow today. I wonder if that's wonder what's going on there. It's almost invisible to them. So those types of attacks are really getting more sophisticated. The way that data is being exfiltrated off systems is also getting more sophisticated. As a security professional, it's kind of an exciting time. It's not exciting for people to deal with the breach, but the creativity and watching how these things evolve is very interesting.
Well, and again, I often say, because I get the really grand opportunity to go across a number of different verticals as we discuss IT and technology evolution and innovation with a lot of CEOs and senior executives as yourself, and we cover a lot of different types of technologies and a lot of different verticals. So I often say that I come to the discussions as a tourist because I can't possibly be an expert on every one of the subjects, nor do I need to. But I think that one of the things that an outsider looking in kind of thinks about is that, was it a case where payment security wasn't necessarily mixed with information, and that now that security situation is compounded by predictive analytics and some of the big data issues that are going on?
Potentially. If we would have had this conversation about 10 years ago, I'd say absolutely. Because you'd see a lot more online processing. You'd see a lot more integrated point-of-sale systems, things that, it's not just a little card machine where you swipe the card and type in the amount to go, where it's actually part of the buying process that has contents of your card, and everything's integrated so that they can process it and do data analytics behind the scenes. But it's pretty common to see that nowadays. And PCI in some respects was designed to force companies to think about how they deal with their credit card information. Unfortunately, what I think has really happened is people focused on PCI because it had fines and negative impact if they didn't do anything with it. Where the bigger discussion that needs to be had is definitely more about compartmentalization of information in general, right? So yes, you can still do great analytical work. You can do lots of predictive analytics. You can do other types of things without actually directly dealing with this sensitive information. And so I think that's where we sort of need to start driving that conversation with executives is, let's think a little bit differently about how we're dealing with this information and how we can best protect ourselves and our customers.
Well, talk a little bit about that. One of the things that I think a lot of our listeners know, fintech, and where Georgia leads, the fintech community is growing rapidly, expanding not only from a statewide or regional standpoint, from literally an industry-wide standpoint, headquartered out of Georgia. But I also know that there's I forget the number, but it's hugely over half of all payment transactions in some fashion or another come through our technologies here in the States. Maybe go into that specifically as it relates to how are payments evolving, and if I'm a business, how should we keep up with the evolution? You mentioned a couple of times, I did too, about the speed of evolution.
Yeah, so it's changing at a pretty dramatic rate, and I think what's happening, what we're really seeing is not that the actual instrument is changing as much as the way it's applied is changing. So as an example, there are some motivating reasons why both merchants and banks should support this chip technology. It's called EMV. The way we're implementing it here in the States is chip and sign. So it's going to work exactly like your normal credit card, but instead of swiping, there's a different reader that you present it with. There's no PIN number associated with the credit transaction like you see with chip and PIN, mainly because it would confuse consumers who are using debit. So we still will apply PIN to debit, but the chip and sign is how it's working here. But there are some pretty significant incentives, things like cross-border fraud protection, chargeback protection, that for merchants to have terminals that can run these transactions and for banks to allow them to run through. But when you look at what's actually happening in the States specifically, we are app fiendish, right? We love apps on our phones, our smart devices. We download them like crazy. We love interacting with our businesses with apps. And an app, in a lot of cases, if it's accepting a payment, becomes a card-not-present transaction. It's just like an online transaction. So what we see, as an example, if you've heard of Uber, is a cab calling company effectively, but you've got a nice car. Right? It's a nicer car. It's a black town car. It's an SUV. And you put the app on your phone. You say, I'd like to come and get me. They assign it right away. The driver calls you, says, where are you? I'm coming to get you. You can see it on the phone. You can watch him drive closer to you. You can sort of got his picture and his license plate number, so it's easy to find him once he shows up. And then you take your ride and drop off, and everything pays through the credit card that you have registered with the app on your smart device. So it's when you look at the differences of PMV is a great technology. The chip technology is fantastic, and there are really great reasons why we should push the chip technology out. That said, when we look at how we are paying for things, we're starting to move away in some cases from using the instrument directly, but using an abstraction of it. So I'm paying with an app. I have a digital wallet, or I'm using something like a decoupled debit where I have a separate card that I use, and it just interacts with my bank through the normal clearinghouse, like a bank transfer is how it interacts back with my bank, but it's got this debit functionality on it. Or we pay with SMS. I mean, there's opportunities to pay and donate with an SMS, which then ends up on your cell phone bill, which probably for the majority of us ends up on a credit card, right? So it's just interesting how we're starting to get creative on how we minimize the fees associated with credit cards to the business perspective and then maximize the interaction, clearing out as many barriers as we can for our customers to work with us.
Well, I think that it's obviously easy to see the beginning and the end, if you will, the beginning of the new economy, a digital economy, and the end of more of the traditional one driven by the analogs of the past, and how these things are going to affect the not just the speed, the efficiency, but also the whole nature of how some of these ecosystems actually operate, and almost be disruptive. I think let's talk a little bit about that. We're running out of time, but what about new products? What about research and development? Anything on the horizon that is in speculation or in development right now? And in fact, are you guys bringing anything new to market?
So most of what we are doing is we help companies manage a lot of their compliance initiatives. So, if it's a financial institution that's dealing with lots of merchants, we have software that helps manage that compliance. And then we have other things that deal with security and other stuff. We realize compliance isn't really sort of the end all. It's sort of the door opener that gets people talking, and then we can really focus on the underlying problems. But the interesting thing is, I've been doing a lot of research in this area, a lot of research with disruptive theory and some of the other kind of theories around how businesses sustain competitive advantage. And what we're seeing is that investments in information technology are really impacting and disrupting established service-based businesses. So as an example, you look at banking and insurance, retail. Those are really big ones. Transportation, things now where a company can come in, they can make an investment in infrastructure, information technology infrastructure, and sort of upend existing well-thought-out businesses, and it's usually too late before they actually figure out that something's happened because the substitute product has now become the superior product, and it's hitting a target market in a better way.
That's I was reading, as I'm sure that you were as well, in talking about some of the research material. MIT has come out with some interesting things as it relates to the digital economy, and really it speaks exactly to that point, that if you don't take a leadership position and engage these things now, that the normal process of competition, the idea of being able to have a stable environment or a stable marketplace, it's, again, you have to look at, instead of looking at, say, for example, I know in venture capital, one of the big things now is crowdsourcing and crowdfunding. Instead of looking at that as a evolution of the old economy, it's really a reflection of the new economy and the way that things will be done in the future. And it isn't an anomaly. It's probably more likely to be the front runner and not necessarily just an unusual choice. Well, great subject, Branden, and obviously a great opportunity to go inside the information with a subject matter expert as yourself. Thank you so much for taking time for joining us today on Tech Talk.
Yep, thanks for having me.